Good afternoon, ladies and gentlemen. My name's Chris Purden. I'm the co-founder and CIO of Ship Street Advisors. We're not actually here to talk about investing in developments. We're actually a fund manager / investment advisor, and we're here to talk about our second strategy, which is UCRO 2, which, as it says on the screen, is a UK regional office investing strategy, which is targeted at our Asian family office clients, high net worths, and is a follow-on strategy from our first strategy. So, the three parts to the talk I'm going to give you today. First is a bit of a background to Ship Street. We're a 2-year-old business, and we're a joint venture with one of the largest family offices here in Hong Kong. And I'm going to run you through UCRO 1, which is our first strategy. The reason I'm going to spend a bit of time on that is because our second strategy, which we're here to talk to people about around the conference, is basically a cookie cutter of the first one. So I'll spend a bit of time explaining how we've executed our first strategy, where we are in that process, what we're aiming to generate for our investors, the types of returns, etc. Wrong way, sorry. If I can just give you a bit of my background, which feeds into what we're going to talk about now. I'm from the world of private equity real estate, so I spent 10 years with an investment bank running a real estate investment platform. My partner, David Holdsworth, is also from that background. We're both ex-Jones Lang a long time ago. We then spent 15 years working together. David then launched Pamfleet, which any of you are based in Hong Kong may be familiar with Pamfleet, who are probably recognized as one of the first private equity real estate platforms in Asia. Very successful group, number of big projects in Hong Kong. They moved into Shanghai, also present in Singapore. David is now the non-executive chairman of Pamfleet, and he's my chairman on Ship Street, and comes from that private equity real estate background. Now, our Ship Street itself is a partnership with the Lee family. Now, that's many Lees in Hong Kong. This is the Lee family who are behind Bank of East Asia. They're one of the oldest families in Hong Kong, very respected, very conservative. They are an equity owner in Ship Street, the platform, and they saw this as a route for them to put their capital to work in interesting real estate strategies with a team which has been proven over the years. That's why we've all got grey hair on our heads, but effectively we follow the methodology and process of the private equity real estate industry. So we find interesting strategies, we due diligence those strategies, we find a partner who is capable of executing that strategy with us, and for all of those of people who are investing overseas, you'll recognize that having a local operating partner is an essential piece to being able to deliver the returns from that space. We will then put a structure around that strategy, which is taking from best practice in our industry. So it's about investing our own money in the strategy, our partners' money, the family money, our managers' money. It's about putting a stick and carrot structure in place, which incentivizes the partner to deliver those returns at the point our investors are getting their returns. So the old 2 and 20 model, for those of you familiar with it, that's a 2% base management fee, and then a carry structure, which is paid to the management team only when they've delivered back their capital to the investors, plus the promise of return. So our ambition at Ship Street is to build a platform which over time develops a reputation for consistently delivering attractive risk-adjusted returns to our investors from a set of interesting strategies, interesting partners in overseas markets. So we don't operate in Hong Kong. Our first strategy is in the UK, which I'm going to run you through now. Oh, I forgot about this slide. This is our process, which effectively delivers on what I've just been saying. So if you start at the top, identifying the strategy plus the partner, we then due diligence that strategy. both from a research point of view and from a partner point of view. So we want to look at a partner's track record, his competencies, we visit with them, we see whether we can work with them. We then negotiate an agreement with them by which they will work for us effectively and for our investors to deliver on that strategy, and we'll get rewarded if they deliver on that strategy. We then take that recommendation to our internal investment committee, approve that, we then put it to our placement team, and we put it to gather investors to fund that strategy, which is part of the process we're here for today and tomorrow to talk to investors about funding our second strategy. Post-funding, we are then involved in all the main strategic decisions behind that strategy. So that's purchase decisions, that's leverage decisions, that's disposal decisions. We then oversee the whole operation of the operating partner relationship. Report back to our investors, obviously that's important. That's financial reporting, that's market reporting. And then once we enter the end phase, we will be involved in all the asset disposal decisions and the return of the capital to the investors with the returns at that time. So as I said, our first strategy was UCRO 1, and we launched this 2 years ago. UCRO stands for UK Regional Offices. It's an acronym, very simple to remember. And it was chosen because it synced particularly well with our partner investors' view on life, where they're a very conservative investor, the Lee family. So they wanted a strategy. They're not interested in the 20% IRRs. They want a steady, income-focused strategy, which they could understand with a partner who they could trust. So the strategy of focusing on the UK regional office markets was something that my partner and I had identified 3 years ago as potentially one which was attractive at fitting that space. So, excuse me. This is the portfolio we've assembled. It's roughly £100 million worth of properties, 9 properties. A mix of what we call core plus. So core plus are fully let properties with either a single tenant or multi-tenanted property, and what we call value-add properties. So value-add properties are where, in our case, the value-add is coming from the fact that we bought the property with a 30%, 35% vacancy, and we see an opportunity to invest CapEx in upgrading the property. So that will be office lobbies, signage, positioning of the property in the market, investing in the actual office space, so upgrading the floors, etc., leasing for a higher rent, and getting a kick through on the value as that process is completed. So, for example, the second building on the list, number 2 Park Row House, is a value-add property in this portfolio. That was bought with 35% vacancy. We've invested roughly £600,000 of CapEx in that property, and we've just had it valued for financing purposes, so our bankers have had it valued, so it's not an aggressive valuation, and it's come up 20% above what we actually paid for the property on the refinance. So just running through a few key points, and again, I emphasize the reason I'm spending some time on this is because our second strategy is a duplication of this. So this strategy was launched originally in April 2018. That was our first close of external investors. We raised £50 million from 22 investors. The Lee family cornerstoned the fund, so they invested £25 million in that pot. The rest of the investors are a mix of Hong Kong high net worths, family offices. We have a Singaporean investor in there as well. So that is our first investor club, all of whom are saying they would like to invest in the second fund. I'm just watching my clock, I better hurry up, okay. So just to emphasize, it's a 5-year investment cycle, and the target is a 10% to 15% IRR, so conservative risk-adjusted returns. That's the portfolio. I won't spend some time on that. You can come and see us in the booth if you'd like to talk some more about our first fund. And the second fund, this is the term sheets. This is the last slide, just 2 seconds on this. 2 weeks ago, the Lee family passed their board resolution to cornerstone this fund, so they're investing up to 25 million in this pot. We're aiming to raise 100 million. We have soft commitments taking us up to 40 million from our existing investors, We have a minimum investment ticket on this pool of 2 million, with fee discounts to apply to investors who will invest above 10. The target returns again are 10 to 15%. That's full cycle net of fees after taxes. So, given the bell's gone, I guess I should stop.